Good morning, everyone, and welcome to our series Fintech Fridays, brought to you by BDO Australia. In our webinar today, we'll be discussing Australia's payments revolution. My name is Tim Aman. I'm BDO's global Fintech leader, as well as our national financial services leader. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you will all be automatically muted, but we'll be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. If you're experiencing any technical difficulties, please click on the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. The Australian payments industry has undergone significant changes over the past few years, even prior to the onset of COVID. Our payment systems have become increasingly digitized, which has set the stage for radical transformations as well. In today's webinar session, we'll look to understand the driving forces behind this payments revolution and understand what the future holds for the payments industry. With me today, I'm very glad that we have Nicholas Tan, Nick, CTO of Monoova. Monoova makes it possible for businesses across Australia and the globe to automate how they receive, manage, and pay funds across multiple payment methods. Automation means reduced cost, increased efficiency, and an enhanced ability to digitally scale. Monoova is an API-first, real-time, and seamless across payment rails for both domestically and globally. Monoova recently announced a first-in-industry partnership with TrueLayer that will allow businesses to leverage the benefits of TrueLayer's CDR consent structures combined with Monoova's new digital payments initiation capability, which is part of the Pay2 service in the new NPP. I'm also pleased to welcome Kallan Hogan, Vice President of Account Development at Mastercard. Mastercard is a household name, not surprisingly, provides innovative payments products and infrastructure to connect billions of consumers, merchants, and businesses worldwide. As a payment network processor, Mastercard manages the logistics of electric transactions. Welcome, both of you, and thank you for joining me on today's FinTech Friday session.
It's a pleasure, Tim.
So, Nick, maybe I'll start with you. Monoova offers bank account-to-account payment solutions with a focus on digital APIs. Can you give us a brief rundown of how these solutions work?
Yeah, thanks, Tim. So, as I said, Monoova is a business-to-business focused fintech, and we provide an API-first service for businesses to connect into all of the major Australian payment rails, as well as facilitating overseas remittance payments from an FX perspective. We see ourselves helping large B2C platforms digitize by providing that API-first access to the payment rails. So whether that's BPay direct debit, but we're definitely seeing enormous growth in fast payments, bolstered by the new payments platform, which has been rolled out over the last couple of years. That's substituting the direct payments over internet payments, which are batch related, and they're now releasing a new digital direct debit service as of July, which we're really excited to bring to market for businesses to adopt.
Yeah, so Nick, we'll talk a little bit more about the future of the payment system, because there's lots happening in that particular space. Kallan, maybe if I just ask you the first question around, Mastercard partners with financial institutions to issue obviously payment cards that are used exclusively in your network. What other payment solutions does Mastercard offer?
Yeah, thanks, Tim, and welcome everybody. So you're right, Mastercard does, we partner with around 23,000 financial institutions globally to issue our cards. But more and more, we're looking at how we can actually make connecting buyers and sellers more efficient. And that's the payment itself, and we can talk about that a little bit later. But there's also all of this sort of technology that wraps around that payment to make it more secure and more efficient. And I'll give some examples of that in a second. I would like to say that Mastercard is incredibly lucky that we have a global tech hub right here in Sydney, one of only 6 in the world. And I guess why I enjoy working for Mastercard is we do have that challenger mindset in how we go about creating new payment options and technology. And that's really born out of, in the US, Our main competitor there has about 55–60% market share, and we're about a third of that. So we have to think differently globally to really grow. And pleased that we're the largest network now in Australia. So on the payment side, let me just talk about that, connecting and buyers and sellers more efficiently. So yes, there's the payment on the card rails. We also have invested in fast ACH. We actually run the fast ACH real-time payments in Europe, Scandinavia, Singapore, Thailand. So we have around 1,300 experts in our organisation that can really help here in Australia. Around the connecting the buyers and sellers, I'll just as concisely as I can, because there's a lot of tech, try and bring to life some of it. So first of all, we have digital identity. So Optus is using our digital identity solution, which does the fraud verification, uses biometrics to make that whole process of being a customer much more frictionless. We have large brands like Crypto.com and Afterpay and Maya who use our online fraud verification to make sure that I am Kallan Hogan when I log in and set up my account. We also have AI technology that wraps around the payment to make sure that there's less fraud. We also run card-linked offers, so the payment, as a customer, I can get an offer from one of 200 leading retailers in Australia that when I use my card there, I get cash back straight away. We do that for about 8 million Australian customers get those offers. And we also help retailers and banks with their marketing optimization around the payment, doing test and learn. We also do algorithms to do credit limits. It's a lot. So looking forward to diving in a bit more on this, Tim, later in the webinar.
Yeah, it's quite interesting because I think, again, growing up in the States, you had Visa, Mastercard, Discover. And I think when people got the piece of plastic, you probably weren't really thinking like a Mastercard was doing all this other technology behind the scenes. So it's, we'll talk a little bit about kind of how Mastercard has sort of evolved, and how that links in a little bit with obviously fintechs like Monoova. So it's sort of an interesting space that we're in Australia. And again, part of the reason I really like the fintech space in Australia is how agile and probably how commingled some legacy companies are with some of the emerging technology companies. So it's quite interesting. But maybe if we just take a step back in terms of, leading up to this sort of revolution in payments, there's been a slight build for this. Obviously, COVID expedited the digitization of the payment systems, and I think everyone would know either ordering Woolies online or ordering Domino's and, contactless delivery, that sort of became a way of life probably over the past 2 years. But obviously consumers have really been really focused on, no touch, obviously some of the technology that's come out with Apple, phone apps and wearables, things of how we pay and things have completely changed. And up on the slide, you can kind of just see kind of the rise, in terms of the MPP, in terms of in a bit of a flatlining in terms of ATMs. ATMs is an interesting phenomenon. I was coming into the city all through COVID, and I think during COVID, there's about 2 ATMs that were actually functioning, sort of in the CBD because no one was filling up the cash tills. So, that sort of really accelerated the fact that you needed to use, sort of a direct debit or contactless payment. You're also starting to see the shift over the past 5 years in terms of remote process transactions. So you can definitely see that this is kind of growing. I'll ask you guys thoughts a little bit later in terms of what's happening, globally as well, because, we've got a few people that are listening in from overseas, and I'd like to hear thoughts in terms of where we think this is expanding, either in New Zealand or Asia or in South America. But I guess, I'll start with you, Nicholas. Like in terms of where do you think is going to be happening next with the digital economies? In terms of where do you think the next piece of growth is going to happen in the payment industry?
Well, we're definitely seeing the growth happening right now, and the transition from, legacy batch overnight or overnight same business day. So, welcome to the Easter. Last time you saw your money was Thursday. First time you see it again, it's a Tuesday after. To real-time digital integration of payments and the whole vast array of use cases that businesses can then start to bring to bear with that near real-time experience. And I think it's something that aligns to maybe what happens today with credit cards or debit credit cards and EFTPOS in the consumer space in some of their smaller transactions, but can really expand to all use cases that rely on a payment transaction between parties.
Yeah, I think it's quite interesting because I think, Kallan, interested in your thoughts in terms of, what do you think the next phase is, in the payments industry? And I guess, as we move to a cardless society, will or when will we go cardless? Do you think that that's going to be happening over the next, foreseeable future?
Yeah, so I'll answer the first question, the second question on the cardless.
Yep.
So I do think that, and I agree with Nicholas, there's a whole lot of inefficient payments out there, check, EFT, batch. I think for Mastercard, where we see a lot of opportunity is in bill payments. So we're launching, and you would have read this year, we're launching pay by account, which is tokenizing bank account transactions. Specifically, the use case I'll give is I've got to pay my childcare fees. They only take, BPay or EFT. And it's really difficult to reverse that transaction if something goes wrong. It's also not secure or tokenized. So we see a lot of opportunity there. I think that's kind of evolutionary. I think that something's more transformational, and because I'm in my mid-40s, I probably don't understand it as much as people who are younger, but I really think decentralized finance and the metaverse, there is a whole heap of commerce that is happening and will happen in the metaverse. People want to stay on chain, and we're changing our settlement processes from fiat to stablecoin and doing a lot of exciting stuff in there. So I think that is one for more on the transformational side, and you get a lot of debate at dinner parties, etc., about that. But I can assure you, the metaverse is real, and there is a lot of commerce that's going to happen in layer 2 there. So that's the answer to the first question. The answer to the second question on cardless, well, we're pretty much already on the journey there. So by the end of this year, 50% of Mastercard transactions, and in the last minute I've been speaking, there's been 11,000 of them here in Australia, on a mobile phone, and that's only going to increase. So as far as cardless goes, Australia is, as we led contactless, we're now leading cardless, and it's already happening.
Yeah, well, I got my breakfast that way, so I'm probably one of those 11,000 transactions. So, Nick, what's your sense in terms of, when do you think? I guess because there's an interesting dynamic. We've got the younger generation that clearly is going to be very comfortable to go down that particular path. I guess if we look at, people above a certain age, they might not be as comfortable to go down that. So, do you think, when do you think we'll go cardless? I guess, in Australia.
Well, I would actually put the proposition that we're already cardless in a number of areas. So we talk about, getting a coffee or whatever it is, but if you use an app today and you have pre-configured your choice of payment, and I think that's where we're going to be going into a broader set of choices. So as Kallan said, even with his, childcare fees, it's locked down to a particular set of rails. Once that set of choices expands and becomes more digitized, it's more about a configuration choice in your app in terms of the experience. So really, all of the kind of payment experience I've had over the last sort of week that's involved an app hasn't actually related to me having a payment step in the experience process. It's all been about the experience, whether I'm getting in and out of an Uber car, whether I'm ordering, food or going to the movies or anything. That whole payment piece has been sort of put to the back end, which is really where we see ourselves. We want to help automate businesses, so all of that they can focus on the experience with their consumers, not on the friction of the payment side of it. Yeah. So as that becomes more and more, and I'd say that all generations are getting very, very comfortable with apps these days. And it's more about broadening the choice and make them feel safe about what they're doing. So if they don't want to use a credit card, if they want to use their bank account, or they want to use a one-time type of account, as long as that's available to have a configuration choice, be that through their banking app, the app they're using for that service, as whether it's a checkout experience or an ongoing service type of app, that's where we see the future going, and I think we'll get more and more comfortable with that.
Yeah, well, maybe I'll have you two talk to my parents back in Buffalo, because whenever I want to get any information sent financially, they send me like Morse code, one digit at a time in an SMS. So I think it's going to be, I think one of the things that's going to be interesting.
Send you a check?
No, I have a check. I've got to carry a U.S. checkbook around if I want to do anything in the U.S. So I think it's going to be interesting. I guess that's a good segue into global. I guess, from your guys' perspective, we've got, a U.S. market, which is, obviously a lot of legacy banking systems that kind of need to be updated. But if you take a look around some of the different regions, what's your viewpoint in terms of digital payments and the opportunity, I guess, to accelerate in places like South America and in Asia? Nick, maybe I'll get your view first on that.
It's interesting. I think that, in countries which have had a low kind of, branch footprint, they've been had really high take up of mobile payments, which kind of leans into the digital payment experience. And, you've got that same pattern being replicated. So if I look at food delivery, it's not that Uber's got the lock on that globally. You've got Gojek as well in Indonesia, for instance, right? They're a massive B2C consumer that have that massive amount of payments that happen all the time on their app. I've got a colleague of mine runs a business in Myanmar, Wave Money, and he's been working through a massive set of basically store sellers that allow people for them to become almost like our postal service, where you can use them as a teller branch to withdraw money, and it's all over mobile phone in terms of that branch network for Wave Money. So there's definitely great examples. The effect of mobile use, the internet affects all that, and the technology patterns are there for them to apply, as well as Australia. So it's definitely not a first world country issue in terms of adopting that technology.
Yeah, and Kallan, I guess like Mastercard, obviously has a global footprint, but I guess what have you started to see in terms of some of the emerging markets in terms of the adoption of the payments technology?
Yeah, and look, COVID was a horrible time everywhere in the world. It still is, but in developing countries, it was worse, right? But what we saw in developing countries was a huge hockey stick of innovation. As an example, people were getting paid electronically in their wages for the first time in developing countries. So we saw the infrastructure really rapidly enhance during that time. So much so that we're seeing, things like QR codes used in Africa, and we're lucky enough we actually have one of our global tech hubs. Remember, Sydney has a global tech hub, one of 6 in the world. One of the other 6 is in Nairobi, and so we are working with governments and businesses in Africa to really make sure that there's trust in the system and that the technology is fit for that market. And so, we're really proud of the work that's there. But to answer your question, I think if the denominator was lower, the actual increase in innovation has been higher. So there has been some good to come out of the pandemic in those developing countries.
Yeah, because I've done a few sort of discussions with fintechs that are looking to go into Asia Pacific, and they're seeing a lot of opportunities just in terms of going into places like Vietnam, for example, 100 million people, well educated, big enough market where they can sort of launch their products. So I guess if you look at Nick, I guess maybe if you can talk a little bit about Monoova's sort of, as you're looking to go to different markets, what are you looking for to make an assessment? Is that country ready for you guys to move over there?
Yeah, it's very much, payments is really linked to the local regulatory framework as well. So all of our APIs are available over the internet. So we deal with a number of multinationals as well as nationals in terms of our focus. So part of it is definitely around the ability to take up, but as we said before, there's definitely an enormous take up already around the digitization for some of these services. So it's really more around how we merge our platform into a local market into those payment rails. So some of the tech we've got for Australia is really focused mainly on the Australian payment rails, because they are proprietary to Australia as we link Australia to Australian businesses. In the international payments world, everyone's coalescing around the new ISO standard and coordinating through platforms like Swift, and that becomes much more of the sort of standardized backbone for inter-country payments, as it were. So then for a purely domestic play, it just becomes part of assessing what the local infrastructure requirements are.
Yeah, and I think Kallan sort of alluded to it. I guess, with the evolving, decentralized finance and blockchain, I think that's going to be the other part that's going to come into play, I guess, in terms of the frictionless payments. So, I think, again, the regulatory environment that you talked about, Nick, I think that's sometimes what's holding back some fintechs from expanding overseas. And we're starting to see some people go to New Zealand as a bit of a comparable sort of country in terms of regulatory. Smaller market, so in terms of, probably it's not really going to increase the numbers too much, but it's more a good testing ground. So we're starting to see a few people head that way. I guess, kind of switching.
Just as a quick segue on that. So, there's, I guess, 43, 44 countries worldwide that have implemented fast payments. And so for us, that's where we see our growth in terms of digitalization. So we're kind of attracted to that. Interesting thing in New Zealand, they haven't implemented that yet, or they're still on their roadmap to implement that. So it's really more around our experience and seeing, how the massive growth of fast payments has improved things over the last number of years since it's launched it. Like the growth rate's been equivalent to the Nordic launch rate. So it's kind of, until New Zealand has that in place, potentially we would not take a look at it, because that's a focus for us would be to focus on fast payments as the growth engine for a particular product.
Yeah, that's interesting, because I've been spending a lot of time in New Zealand during COVID, because that's the only place I've been able to travel. So I've been trying to catch up with fintechs on there, and it's kind of interesting seeing the involvement of the ecosystem. So to me, they're really focused on the regtech space now. Sort of if probably a flashback to maybe where Australia was a few years ago, and then you're going to start to see the involvement, in some of these other sort of fintech subsectors, which hopefully will be quite interesting.
Yeah, we see massive opportunity in terms of New Zealand companies broadening into the Australian market, for instance.
Yep.
So there's a number of core players there. So if we need to back them in terms of their engagement into the Australian payment system, that's definitely the synergy we would see.
Yeah, we're starting to see actually a bit more. It was actually quite interesting when I was down there. There's a lot of fintechs that are Australian fintechs that are looking to try to into that market, probably more kind of on that broker dealer type side, rather than and then I guess a lot of New Zealand fintechs saying the logical step is to come over here. So I think you're going to see a lot more cross-border collaboration on some of the fintechs over the next year or so. So, I guess one thing I wanted to talk a little bit about is sort of e-commerce. Obviously during COVID that shot up exponentially in terms of people's buying experience. It sort of settled down a little bit probably this past 6 or 7 months. I work with a lot of sort of e-commerce online companies, and the first part of COVID, huge sales. Second time, probably slowed down a little bit. But just interested in your guys' thoughts in terms of where do you think e-commerce is going to be going? I guess in Australia, and then I guess from a global perspective. Kallan, maybe I'll start with you.
Yeah, sure. Thanks, Tim. Well, I think it's not going anywhere. I think it's only going up. The only way is up, as Yaz would say. And look, I'll give you some data points. So, a couple of years ago, before the pandemic, our kind of mix of e-com versus card present, it was about 30% of all spend. That's not transactions, but the volume of spend was in e-com, non-card present. That's now around 50-50. So obviously card present is the bulk of transactions. This is just on volume, and it's continuing to increase. It's stuck during the pandemic, and I think it's going to continue for a number of reasons. One is obviously 5G or 6G they're even talking about now. It's a lot easier to buy things on your phone, and even we're talking to companies that the future of buying fuel obviously it's going to be electric cars in the future, but even in the short term you're going to be able to have an app where you just drive up to the petrol station and drive away. That'll be an e-commerce transaction. So there's 5G, 6G, which is going to make things like that that we've been doing traditionally in a non-e-commerce environment happen. Then there's the Internet of Things, which it feels like we've been talking about that for 10 years, right? But there's no doubt that it hasn't scaled like we were talking about it sort of 5-6 years ago. But there's no doubt that the number of devices and the devices will continue to get smarter, and we've seen the increase in convenience during COVID. And then distributed ledger technology. I mean, as I alluded to before, there is a lot of commerce that's happening there. We're even helping governments with central bank digital currencies, etc. So there's a number of really strong reasons why e-commerce will only continue to grow from where I sit.
Yeah, Nick, I guess, what's your view on that? It's probably going to be something comparable to what Kallan sort of said, but I guess in terms of, we've kind of seen this generation of consumers wanting things on demand 24/7, 365 days a week. E-commerce and COVID kind of brought that out. I guess, from your perspective, if you talk a little bit about the real-time payments, where have you started to see this sort of growing consumer demand almost forcing people down this change in how payments are treated?
Yeah, look, I remember there was a pretty interesting kind of meme or joke at the beginning of COVID with all the lockdowns where people were saying, who is driving your digital transformation? We had store-only businesses, etc., that were going online for e-commerce. Now, is it the CEO, is it the CTO, is it the CDO? It's like it's COVID. So there was a massive switch for people in terms of their plans. They had no plans to really digitize or to go online. So that uptick has happened. We've had 2 years where some MVPs have been more established, and so for a lot of businesses, as Kallan has said, that's become an accelerated new normal in having this hybrid mix of being able to offer both online and in-store services to their customers. So the next generation is really now past that MVP. The first part might have been together with sticky tape and string, probably back-end inefficiencies. It's not scaling in terms of how they can do automated reconciliation for that. So certainly for us, our proposition to businesses has been, as they really want to scale some of those initial initiatives to really digitize with some of the APIs that we represent, that allows them to do electronic reconciliation, automatic real-time reconciliation, and again scale the back end of their businesses as they continue to iterate and expand those initial deployments that they might have made.
Yeah, it's an interesting. I mean, we'll keep talking a little bit about this a little bit more, because I think it's that efficiency and frictionless, approach and ability to get cash quicker, which helps people from a cash flow modeling perspective. Kallan, just coming back a little bit, I guess, if you want to talk a little bit about Mastercard and buy now, pay later, and different plans that you guys have. And I'm interested in your guys' viewpoints in terms of, we obviously saw an explosion of buy now, pay later. Even when you walk into stores now, you might see 4 or 5 different types of buy now, pay laters. The bigger banks are looking to white label buy now, pay laters, but at some point there's going to be a saturation in the local market. But I guess, what's your viewpoint in terms of where you think buy now, pay later is going to be going in Australia? And then I guess a little bit more from a global perspective. Kallan, I'll start with you.
Yeah, thanks, Tim. Look, maybe if we just step back and say, how did buy now, pay later come about in Australia? And I remember reading research, a decade ago when we were first starting to research millennials, and they were very clear in saying they didn't like credit cards, didn't like interest rates, they didn't really know how they were calculated. They wanted certainty in lending, and they were willing to pay a price if that could be offered. All of that research was, largely ignored for many, many years, and you could have a debit card where you could pay from the funds existing now, or you could have a credit card, which they were saying they didn't understand. And so along comes, buy now, pay later, and it wasn't a new idea. This was, if anyone had been to South America over the last 2 decades, 3 decades, everywhere is installments at retailers. It's built into the system there. So really they came along and answered a consumer need. And the retailers liked it because they were getting increased sales. The consumers liked it because they were getting what they were asking for, something very simple, something very transparent. And I think they did a really great job with marketing. So I think if you look at how buy now, pay later, flourished in Australia, I think there was a gap in the market, and the buy now, pay laters very, very cleverly took that gap by listening to consumer needs. I think there will always be a buy now, pay later market in all markets. People want to buy things before they can actually afford it. They want to manage their own kind of cash flow. We've seen that throughout millenniums. So it's not going to change. I do think we're in a consolidation phase. Mastercard is launching its own installments program to work with our partners, you know, issuer partners as well. So we think it's always going to exist. We think there'll be consolidation, and we think Australia's done a really good job in innovating what people have been saying they wanted.
Yeah, it's an interesting one. Nick, what's your view on the buy now, pay later? And I guess, I would probably agree with Kallan. I think we're probably at the point of consolidation is going to be, going to be happening. There's a few fintechs that were starting maybe down that sort of buy now, pay later, and they probably had to pivot when they started to think, okay, well, there might be a saturation there. But I guess in terms of, from your perspective, how do you think buy now, pay later sort of changed the consumer experience?
Look, as Kallan said, it's not a new concept. In fact, the ability to lay by a product, has been around for decades. It was just a sort of paper format. You couldn't take it away. It was a horrible experience. So really, this is again just an example of another use case in society that's gone through a level of digital transformation, and it had that overlay in terms of the focus on the user experience, and that's driven demand and uptake because the experience has become more convenient and seamless, and there's been an ease for merchants to add it into their thing. So I mean, if buy now pay later was still onerous, there wouldn't have been the same amount of merchant take up as quickly, because it would have been horrible to integrate into their services and things like that. So again, whether it's buy now pay later, it's food delivery, if it's transportation, there's been this change impact based on the forces in technology. So as per any of those, we've seen a number of entrants. There's usually one or two that survive that overall sort of excitement part. You might have an existing OG player coming in now that Apple's going to launch pay for in terms of their Apple Pay. Sort of good luck to some of the others potentially as that came in. PayPal had already come into it, so it's just going to be interesting to see who survives. But it's going to be exactly the same use case for a certain demographic that like that experience and that choice.
Yeah, I think it's been great, obviously, seeing how well the buy now pay laters have done here and gone global. So I think it's been great. It kind of highlights the ecosystem here in Australia, just in terms of the innovation. To you guys' point, seeing a gap in the market, being able to be agile, get something out there, and probably we'll talk about this a little bit when we get to regulation, but one of the challenges is the innovation is sort of staying one step ahead of the regulation, and so we're starting to see probably at some point that's gonna catch up. We'll talk about the next FinTech Friday. We're talking about crypto and blockchain, and that's going to be obviously quite topical in terms of just what's been happening in the marketplace. So I guess just coming back to real-time payments, I guess what are some of the barriers, I guess, for people, if you're talking to potential client, what are some of the barriers that you're working with them through to be able to get real-time payments up and running, in terms of advice? Maybe Kallan, I'll start with you and then go to Nick.
Yeah, sure. I think that my advice would be make sure that you're going after an area that needs the solution. If you look at somebody buying a pair of jeans online, to them, if they're using PayPal, Mastercard, etc., that is real time to the consumer. I think where the opportunity is, and we see this because, as I mentioned at the start of the call, we acquired Vocalink in Europe, Nets in Scandinavia, and so we run the fast ACH real-time payments in Europe, Scandinavia, Singapore, Thailand. And so we see the use cases really around the larger payments. So in the UK, we process about 90% of wages, as an example. There's disbursements, there's if I'm buying a house, if I'm buying a car, there's all that sort of area there where I think there's some efficiency that can happen in Australia. But you have to be careful with fast ACH. We know this because fast payments means fast fraud, and it goes back to my earlier stump speech that we have a fantastic payments ecosystem in Australia because there's trust in the system. and I'm sure that will continue, but that's just the kind of watch out.
And Nick, I guess, what are you seeing as some of the barriers for the real-time payments with people that you're talking with?
Well, I think that the availability of some of the services to businesses from their normal providers is actually where we're seeing opportunity. So I gave a talk at the Big Tech and Finance highlighting that a lot of the focus on fast payments in Australia has actually been on the consumer space. Business banking is usually run on a different tech stack in some of the banks that don't have the same focus on uplifting the experiential side of it, the integration side of it. So that barrier in terms of their normal provider is actually where we're seeing opportunity to basically step in and provide an alternate service. We have those APIs available to give some sense of take up. The 11 million pay IDs that are in Australia at the moment operational, 10% of them are actually created by Monoova and related to the business accounts that we're supporting for our clients for the use cases that they need to support. That's the barrier in terms of not having the broader availability for that. There is then the technical integration, but certainly you've got different suppliers that can help with that. And if again, apart the scaling, the upfront investment is worth it because then you don't have to scale out your back office team, your middle office team. And if you're providing services in a very near real-time basis, same day type of thing, then 7 days a week, then that's definitely critical to how you need to adopt, why you need to adopt that payment.
Yeah, and maybe Nick, maybe you can explain a little bit about like that TrueLayer partnership and how you guys are going to be working together with CDR in open banking. Because I think obviously that's there's open banking's been a bit of a slow start here in Australia. Like we've been talking about it for a couple of years, but maybe just you can explain a little bit how you're looking to leverage that sort of relationship.
Yeah, so I think in terms of how businesses, and maybe Kallan had brought this point up around fraud and diligence, due diligence, etc. So the consumer data right is an enormous change around democratizing access to a person to allow access to a business for their banking details. And so TrueLayer is one of the partners that can provide a platform for businesses to access that data. So again, if you think about a life cycle that says, well, I need to know more about this person that I'm engaging in a commercial relationship about, CDR allows that seamless platform in a regulated fashion to access the related information that's needed. You go past that step, and then in terms of future payment initiation for that business for particular services, and this is a future product we're talking about that's just about to launch in Australia, where you can do digital payment initiation from the business side. So it's not about consumers making a decision to pay, but again, the business saying, okay, well, there's a bill due, I'm going to initiate the payment and draw that from the customer. And then that's what we offer. It is on the drawing board, and there's a Treasury paper talking about the next iteration of consumer data right to talk about payment initiation. But our partnership is to basically propose to businesses that you've got the benefits of customer insight around consumer data right through TrueLayer and payment initiation through us with the Pay2 service that is launching on the MVP.
Yeah, and Kallan, I'm not sure if you have any comments in terms of, I guess how Mastercard is going to be, how they're approaching sort of CDR in sort of the open banking world.
Yeah, no, we're going to play in it big time. So it's a big investment of ours. We're getting our accreditation at the moment. We acquired Finicity in the US, which has been in operation for 20 years as an open banking technology platform. Drives a lot of the underwriting and decision making for some of the biggest brands over there. We've also acquired A in Europe, which comes from a regulated open banking market. So we have a lot of technology and a lot of people, and I think we have the brand kind of trust as well. So we're building that on soil at the moment. We're really excited about how we can play in open banking, and I think it comes back to if the consumer is going to give permissions to Mastercard and to other players to give their data across, then what are they getting in return? And so I think we've got a track record of building great customer experience and personalization, and working with partners in a really meaningful way. So we're super excited about open banking. Bring it on. We're going to be a really big player here in Australia, and I'm excited about that.
Yeah, I think it's a big opportunity. We've been talking about this on, I've had a few people on talking about open banking in the past, and I really do think there's going to be great opportunities here, in Australia, again, given the ecosystem of fintechs and companies working in that ecosystem. So I'm really excited to see how we go from kind of open banking to open finance, and really leveraging the different opportunities that are going to be kind of in the marketplace. Just switching a little bit to
the one thing that's going to be really basically a game changer for consumers is this new experience around control. So both with the CDR regime, you've got the ability to basically, in your banking app of choice, turn off access to that data if you choose so. And similarly with Pay2, it'll be in the banking app where you can turn off that payment agreement that you no longer want to do. So, the horror stories around endlessly trying to call a certain, gym franchise that I won't name to try and, disconnect a direct debit payment that you made on January 1st is a thing of the past. Again, it's all about the power of the consumer in their banking apps around choices around those two use cases.
Yeah, I think it's a good point. Like, I think, during COVID, I think a fitness company continued to direct debit me every 2 weeks, and you couldn't even get in the gym. So I think it's going to be a bit interesting about what happens with. I wanted to talk a little bit about Pay2, so that's a good segue, Nick, in terms of, obviously the Australian government's really focusing on reviewing the payment system. Obviously in 2018, the original NPP sort of came out, and now there's going to be a bit of a refresh in terms of looking at how they can have international rails, and the plan to launch Pay2. And so maybe Nick, you can explain a little bit what Pay2 is for those that don't understand that. And I guess why are people not going to be ready for Pay2 and I guess the international payment system? What have you been hearing in the marketplace?
So a quick 5-second segue. So Pay2 is the next feature available on the new payments platform. It's really a replacement for the paper-based direct debit. So anyone today might have signed up a direct debit with your gas company, your electricity company, your gym, etc., to take a monthly payment out of that. Even your superannuation payments. Again, it's all wet signature, pretty horrible. It's very hard to remember who's doing it. You just see all this money disappearing out of your account on a per basis. So the basis of using the existing fast payment rails and adding onto it this concept of a digital payment agreement is what's being launched as of July by the actual Reserve Bank-based NPP platform with a number of main players connecting to it. So some of the banks have flagged to Treasury that they would like a delay. However, CBA has definitely said that they're going to be stepping up to the mark, and they're a very, very large player in terms of consumer footprint. So in terms of establishing a two-sided marketplace, we're pretty excited that there's going to be a major bank and some subsidiary banks in there. And the other banks have been basically written to by the Reserve Bank governor to say they really should be strongly encouraged to be in line and connected by February next year. So it's not too much of a delay for that. But back to the experience. So again, within the banking app, you'll have a choice where should you digitally agree through that business that you'd like to set up a particular subscription or payment agreement ongoing, you'll get that prompt in your banking app to agree to it. So again, this is a digital experience. You agree to that, and then that puts it in place, and they can obviously do the same payment. The payment now uses the fast payment or NPP payment rails back to the company in terms of payments. So again, they get paid in real time. So you can go from the wider experience of what the use cases are today, which are fairly sort of vanilla, back to microtransactions, where basically at an e-commerce checkout you can actually use Pay2 to basically put in a digital agreement there and then. You agree to it in an offline fashion, which is great security because it's basically almost equivalent to 2FA, and then you've got that subscription or service within the e-commerce experience then and there. It might be a one-off versus month to month as well. and it's because it's paid for digitally, the business sees that payment straight away. You remove all the sort of friction with direct debits there are today, because at the moment you actually can pull that money. If the money is not there, then you have to return it. There's a whole ecosystem of ugliness of the underneath the iceberg in terms of failed payments and return payments will be addressed by that. So one, it's digital, it's safer, it's more convenient to the consumer, both to know what their agreements are, what they can turn on, turn off. It's much more efficient for businesses. It's digital, it's real time, and there's a much more easier way to reconcile for payments overall. And from an adoption point of view, the timeline's actually there. There's going to be a lot of players there day one on both sides of that marketplace, and it'll just get bigger in terms of the footprint on the consumer side when the larger banks finally get there. And the next step in terms of NPP's roadmap is then to enable the international payment side of it, which is it's really almost there. It's just a couple of tweaks really on a regulatory point of view in terms of how we bring payments in and out of the country. So there's some coordination between Treasury, Austrac, and NPP themselves. So we're quite bullish on that side of it as well. Doesn't mean a lot of technical changes for us. It's really more how to streamline payments in and out.
Okay, thanks for that, Nick. I guess, Kallan, from your perspective, some of these pending changes, how is Mastercard approaching Pay2 and the international payments? Opportunity or risk for you?
Yeah, so again, we really want to play in this space. We think it's exciting. We actually have a multi-rail strategy at Mastercard. Again, we've acquired these these amazing NPP companies equivalent companies in Europe and Scandinavia and Singapore. And I think that pay by account tech that we announced a couple of months ago that's launching this year is a great example of that. So we are going to push it down, NPP. We're going to use our tokenization technology. We're going to partner with an Australian Fintech to do that. And it's reversible. I think Nick was saying that point. There's a lot of ugliness with these types of payments because it goes so quickly. How do I get if I don't receive my goods, or if the service wasn't provided, or if I send it to the wrong person? Having that governance and having Mastercard scheme rules around chargebacks, etc., is going to be really important. So we view it as an opportunity, and this is not an opportunity that we've just discovered yesterday. We've been investing in these types of companies and peoples and partnerships since I joined the company 5.5 years ago.
Yeah, you guys are going to put me out of business from an auditing perspective, because we used to, when you audit banks, you spend a fair amount of time looking at chargebacks and failed transactions, etc. So I think it's going to be, I think it's going to add an element of financial certainty, like in terms of when you're looking at numbers from an auditor perspective, and a better overall process. So I'm looking forward to that piece of it. I guess in terms of from a regulation perspective, Nick, there's been some talk about the new payments licensing framework, and will that add regulatory, sort of certainty? And do you think that's going to increase competition here, innovation, or reduce it here in Australia?
Oh, look, regulatory certainty gives people certainty to plan. So I think it's definitely welcomed by the industry. There's even additional regulatory planning that was going to be looked at in the blockchain industry, for instance. And so all of that was welcome because it gives a solid path for teams to plan around. So there's definitely a great ecosystem at the moment, and we really encourage that to be improved in the future.
Yeah, and it sounds like, Nick, you're quite close to some of the regulatory changes in government submissions. Maybe you can explain how Monoova sort of participates in some of the sort of conversations with government, and what are been some of the key points you guys have been raising in discussions with government?
So there's submission opportunities into main areas such as Treasury, which is kind of a key link into the RBA. We also have direct participation. For instance, there's a Fintech kind of committee, that Australia Payments Plus, which brings all of the consortium of payment providers together. So again, we're a participant in those types of forums at an industry level to then help shape industry submissions into government as well.
And Kallan, I guess maybe from a Mastercard perspective, how do you guys typically engage with government and parliament and on some of these submissions?
We have a great team that works on all regulatory matters. They work in a positive and proactive way with all regulators, and I'd be doing them a massive disservice by giving my armchair commentary as a person who's in business development. So yeah, I'm happy to get those calls.
You don't want to give anything away. No, I think it's probably good. It's so I think what we've been obviously seeing. One thing I really like about, again, the fintech ecosystem is there's lots of fintechs that are participating in some of these papers and submission papers, and I know Fintech Australia has been extremely proactive in this, and I think it's good for the industry, in terms of having a collaboration with the government to try to come up with the best-in-class process here in Australia. So I guess we'll watch this space in terms of what's happening with mobile payments and some of the things around, I guess, better information for the consumers in terms of understanding fee structures. It's probably not surprising given some of the output of the Royal Commission, and again, in terms of what you're seeing in the super space around making sure consumers have that right visibility and understanding. So, I think one thing we talked about a little bit was, we talked about generational and will people use digital payments. I think as we go through the next couple of years, it's really trying to get people educated in terms of what they can or can't do. There's obviously a cohort of people that, still very concerned about sharing information. So, they've got that ability not to participate. And I think that's probably an important part. So this is more an opt-in rather than you have to do it. So I think that that's an important thing that people have to just keep in the back of their heads. Any final comments? We've only got a few minutes left, and I wanted to thank you both for participating in today's discussion. But Kallan, maybe if I just leave with you, if you had to predict the next 12 months in the payment industry, where Mastercard's going to be, here in Australia, any last minute predictions from your perspective?
No, I think I've outlined, the things that we want to do from an evolutionary point of view. Pay by account, our installment programs, our open banking, and then on the really transformational stuff that you're probably not thinking about as you're having your breakfast cereal. Parts of the metaverse and staying on chain, making sure that we provide settlement services that are non-fiat and that are appropriate. So that's where I see, and that's a lot of stuff to happen in the next 6 months, and it's very exciting. The amount of change that's happening in payments, we've been lucky enough to be in payments for almost 2 decades, and the amount of change that just continually happens each year is very exciting. It was only a couple of years ago we were trying to figure out how to put payments onto phones, and regrettably there was a consortium, you might remember this, Tim, that was called ISIS. I'm not joking. That was how we were trying to figure it out. It was a consortium between telcos and schemes and other networks, and here it is. By Christmas this time, half of Australians' payments will be on a mobile device. So it wasn't that long ago. So really, really excited, and really excited to partner and do new things in the fintech space. As I said, we have a real challenger brand mindset, and really proud to partner with a lot of Australian fintechs. I won't start naming them because I'll miss one and get in trouble, but really thank them for their support, and really look forward to doing new and different things together over the next half a year.
Okay, thanks, Kallan. Nick, I guess 12 months from now, when we sit you down in the chair again, what's success look for Monoova in terms of where you guys are going to be in 12 months from now, and any predictions for the overall payments industry?
Yeah, so look, we're really on the cusp of a major change. So, both with digital fast payments and the coming digital payment agreements is really a once in a generation change in terms of the payment sort of infrastructure. It's definitely going to be in place. It'll be there in industry. We really want to partner with businesses for them to reimagine. Again, a lot of them aren't payment nerds like us. They don't know some of the ins and outs of what's happening. So it's really an education campaign for us to really embolden businesses to think again, think differently about how they can change and improve and scale the business proposition, the consumer experience proposition around these new capabilities, and basically help grow those businesses through that. So our success is through the success of our clients and customers by using these new capabilities to make new amazing use cases and consumer experiences that don't exist today.
Okay, well, we'll watch this space. We'll see what happens over the next year. But I wanted to thank both you, Kallan and Nick, for participating today and sharing your valued insights. Hopefully, everyone on the call found this to be a great session. And looking forward, Kallan, to see you next week down in Melbourne. Nick, I know you can't be at the Finnies, but I know some of your crowd's going to be there. So I'm really looking forward to celebrating with the FinTech community down at the Finnies next Thursday in Melbourne. And that brings us to the end of today's session. You'll see on the screen the next sessions we're going to be covering. I mentioned blockchain and crypto. That's going to be quite topical, just given what's been happening in the market, and we can look back to see what's been happening in the first part of the year. And then we'll be wrapping up for 2 other sessions on capital raising and customer acquisition, which is a very hot topic with a lot of fintechs. The details of the webinar will be shared with you in our follow-up email from today. And if you missed any of our earlier webinars, my team will be adding links for you guys to watch that. And before we close the session, we'd appreciate if you can fill out a short feedback survey so we can improve our webinars on a go-forward basis. Thanks again for joining. Thanks, Kallan. Thanks, Nick. Have a great Friday. Thanks. Bye.
Fantastic. Thanks for having us. Thanks, Cal.
Yeah, thanks again.